everyone. Welcome to Wealth Redefined. I'm your host, Michael Reynolds, independent financial advisor and owner of Elevation Financial. I'm on the web at elevationfinancial.com. Welcome today. We're going to talk about life insurance. Pretty short and sweet. This will be a fairly short episode, very specific, but it's about life insurance and should you buy it before you need it? This is an interesting discussion because there's some common wisdom out there on getting life insurance. And like much common wisdom, it is not always one size fits all. Some of the rules of thumb that you hear, some of the guidelines, like many things in finance, it's unique to every situation. And so I like to unpack sometimes these kind of blanket guidelines or blanket rules of thumb to dig a little deeper and talk about some of the nuances and some of the considerations beyond just the typical rules of thumb. So today we're going to talk a little bit about life insurance. And again, should I buy life insurance before I need it? So we've talked about life insurance before on this show. I won't go into extreme detail on the life insurance topic itself, but generally, let's just, as a refresher, kind of talk about life insurance and what it's for. So life insurance is designed to replace income in the event of your death. Again, not fun stuff to think about. We all hope that we will live long, healthy lives, but life insurance exists for the specific purpose of replacing your income or providing financial support for others in the event of your death. So it's really designed to, again, provide financial support for those who are financially dependent on you. This typically takes the form of spouse or children. So if you are one of the primary earners or one of the earners in your household and your income is significant and vital to your family's well-being, then that is a good general use case for life insurance, so to speak. So, you're married or live with a partner, you both have income maybe, and it's you kind of combine finances together. And if one of your incomes were to disappear, that could provide a financial burden on the remaining partner. That would be a good case for life insurance. Again, same with children. If children are financially dependent on you, then life insurance is designed to provide a lump sum payment to provide support, either income or other uses for those who are financially dependent. In the event of your death, that's what life insurance is for. That's what it's designed for. There's different types of life insurance. I'm not going to get into that. There's term life, and then there's cash value life. Typically, there's very few cases where cash value life insurance makes sense. Typically, generally, we talk about term life insurance. That is just pure insurance for income replacement. So, how much life insurance do you need? We've talked about that before as well, but the general kind of rule of thumb that a lot of people use as a starting point is 10 times your annual income. That's a starting point. Again, that's not specific advice. That's not one size fits all, but it is a general rule of thumb that has some value to it. Some would say 10 times your income plus, how much it would cost to pay off certain debts or all debts. Some people say, 11, 12 plus times your income to cover other contingencies. Lots of variation in there. But as a side note, I find that so many people that I work with or talk to are underinsured. So 10 times their annual income is usually better than they have in place. So I find that lots of people have no life insurance at all, or they have maybe a basic $50,000 policy because it's provided free through their employer. So again, these rules of thumb are not meant to be taken necessarily literally in every situation, but as a good ballpark, 10 times, 12 times your income can sometimes be a great starting point. And the idea behind that is that could last a certain amount of time to kind of cover when, children might need it, or it can be invested, or a hybrid approach. And it somewhat replaces at least a portion of the income that was lost when the primary earner's death results in that income disappearing. So that's kind of what it's for, some general guidelines there. So here is the discussion point today, and that is, should you get it before you need it? A lot of people would say, well, you don't need life insurance if no one's depending on you financially, so you don't need it. Let's say you're in your 20s, you're single, no kids. The common wisdom would say that you don't really need life insurance because no one is financially dependent on you. And a lot of people would say, well, wait until you get married, wait until you have kids, wait until you have some sort of situation where you have financial dependence. And there is some logic to that. But one point of consideration that is worth thinking about as you think through when to get life insurance is life insurance gets more expensive as you get older. That's just a fact. Premiums go up, but the cost of life insurance increases with every year that goes by. Every year you get older. One caveat that kind of balances with that, however, is that life insurance gets cheaper as the term is lowered. So, for example, a 20-year term policy will be cheaper than a 30-year term policy. So, when you're thinking through life insurance, there are a couple factors there, but one of the significant factors to think about is that life insurance typically does get more expensive as you get older. Also, general health is a primary concern here. So, age is a factor, but general health is a factor. So, many health conditions often will develop later in life. Things like cancer, heart problems, diabetes. Lots of health conditions can surface later in life. And when those things surface, many times they can make you ineligible for life insurance. So, it's getting better in certain calculations are being more customized and more specific based on health conditions, but still there's a very good chance that developing a significant health condition at some point in your life could make you ineligible for life insurance, or it could make the cost astronomical. So those are things that often can happen later in life, and the situation could manifest in the form of, hey, I'm not getting life insurance now because I'm young and single and don't need it. Maybe 10, 20 years later you get married and or have a partner and children that depend on you, and at that point you're like, okay, great, now it's time for life insurance. But in that time period, maybe you developed and maybe even beat cancer, or maybe you developed diabetes, or maybe you developed some sort of other condition. Maybe you're managing it well, maybe you've overcome it. Even so, just that history of significant health conditions can disqualify you from getting life insurance. And at that point, it's kind of too late. You're not eligible to get life insurance. And so that is a factor that you want to consider as you're evaluating when to get life insurance. Now, again, this is not a discussion on, hey, you should or should not do this. My goal, as always, is to help you think through the options, think through the considerations. So, with this in mind, it might be worth considering whether you want to lock in life insurance when you're younger and healthier. This is a valid consideration. This is a valid path to take. Life insurance when you're younger is typically much cheaper, even for a pretty large amount and a pretty long term. It can often be very inexpensive. So when you have life insurance in place, you set a beneficiary. The nice thing is, though, you can change that beneficiary anytime you want. So you can update the beneficiary, contingent beneficiaries. It's typically a simple form to submit to your insurance company. So hypothetically, let's say you are 25 years old, you get term life insurance for 30 years. You don't have anyone financially depending on you, but you lock in that rate. You lock in life insurance, you lock in your premiums, you've got the 30-year term in place. Uh, then later, let's say 5 years later, you get married, or you're in a long-term relationship with a partner. Maybe you have kids. At that point, you simply change your beneficiaries to assign it to spouse, children, etc. You then make that change when you have it, and you've already locked in your policy in place. You simply update your beneficiaries. So there's no worry of developing health conditions later that could disqualify you because you've already locked in that policy. So as a sample, again, don't hold me to these quotes. These vary, these change all the time. This is not, a one size fits all quote. You're going to have a more customized quote in your situation, but I did run some simple basic quotes to kind of give you a sense of what the cost could be. So for a 30-year term policy for $1 million in coverage, which is a good amount, sounds like a lot, but it's appropriate amount for many people. For $1 million in coverage, again, 30-year term for a 25-year-old woman is about $40 a month. Now that is with the preferred classification. Life insurance comes with different classifications like preferred, preferred plus, standard, standard plus, et cetera. It's all basically, it's based on your health and your medical statistics. There's a whole discussion to be had about, body shaming and some of the problematic issues that come with those health classifications. I'm not going to get into that because a whole discussion itself, but be aware that the way the life insurance industry operates is that it takes into account things like height, weight, age, health history, health conditions, whether you smoke or not, all sorts of things like that. So this is making the assumption that this person that we're hypothetically quoting is in the preferred classification. And I will say that it's easier to be in a preferred or even preferred plus classification when you're younger than it is when you're older. When you're 25 years old, it's more likely you're going to be in a preferred classification than when you're 45 years old or 50 years old. So this is a reasonable quote to look at. Again, all discussion of problematic body shaming aside, this is a reasonable scenario that is again reasonable. So again, 30-year term policy, 1 million coverage, 25-year-old woman, about $40 a month. When you go up to preferred plus, it gets even cheaper. If you lower the term to 20 or 25 years, it gets even cheaper still. So I'm not saying $40 a month is nothing when you're 25 and starting out, but it's very manageable. Most people spend more than $40 a month on their cell phone bill. So if it's important to you to consider locking in your life insurance before you need it and getting an excellent preferred rate and getting the coverage you might need later in life now, and basically hedging against the possibility of being disqualified due to health conditions later in life, it's worth considering, do I want to lock in life insurance now? So again, not a one size fits all. It's very dependent on your situation. If if you plan to get married, have kids, these things can change. You can change your mind later. So, keep that in mind and take that into account. But it's one way to consider planning and preparing for the future at a fairly low cost and being ready for those things that might happen. And those things being, you end up with dependents that are financially dependent on you. So, again, for you to think through, it's not a right or wrong situation, not a black or white situation, but it's a consideration. And many people didn't realize they could get life insurance and lock it in before they need it. It just doesn't occur to some people, especially when you're very young in your 20s. It's not something we think about. So this does apply to people older as well. So let's say you're 45 years old, you're very healthy, you are thinking you might get married at some point or might have kids at some point, but you haven't yet. You can still lock it in. Whenever you lock in life insurance at that point, that is when you lock in your rate. So it doesn't mean you have to be, younger for this, but the scenario I typically see is a younger person starting out their life, no, long-term partner or children, no financial dependence, and therefore they don't consider life insurance. But this is a discussion to help you kind of think through, hey, maybe it is worth considering. Maybe locking it in now makes sense. So again, food for thought to consider. I hope that is helpful in thinking through your specific situation and what's important to you and kind of knowing your options and knowing the possibilities there. All right. So with that, I told you to be short and simple. We'll end it there. As always, thank you for stopping by and being a listener. You can email me at podcast@elevationfinancial.com, or you can go to my website, which is elevationfinancial.com. And you're welcome to book a complimentary money session using that friendly button on the homepage. And it's about 45 minutes where we can chat about whatever questions you have about money. And feel free to do that anytime. Thanks again for joining me today. Have a great day. We'll see you next time.